What's up, you guys? I'm Dan, this is Frugal Not Cheap, and today we'll talk about how I dumped my bonds and went back to 100% stocks during this bear market. So you might think that the heavy year-to-date losses in the stock market would have me freaking out and selling stocks and buying more bonds, but that would be exactly the wrong thing to do. So the big benefit of rebalancing a portfolio, of course, is that it forces you to sell off some of the winners in order to buy some of the losers and get things back in balance. In other words, it forces you to sell high and buy low and vice versa. I just ended up taking this a little bit further and just sold off all of my bonds and ended up just with 100% equity allocation once again. Essentially, I just felt like even though, yes, I would get better risk-adjusted returns, I found that really I'm totally okay with the declines, and that having those bonds there as sort of a psychological salve really isn't worth it to me, because over the long run, because their average returns are lower, they really just represent a drag on the portfolio. Now, I don't believe that one can consistently time the market successfully, but I did get a little bit lucky with the timing. So I decided to get a bond allocation back on December 17 of 2021, and while this wasn't quite the peak, we had a little bit of a Christmas rally following that, it wasn't all that far off. I sold off some of my VTSAX, or the Vanguard Total US Stock Market Index, and bought a 60-40 mix of international and domestic bonds using the funds VTABX and VBLTX. The global bond market is about 40% US and about 60% international, and that's why I followed those weights. And then not long after my purchase, the market started to fall very sharply and continued to fall for the first half of this year. Now, I did mention in a previous video that the diversification benefit of bonds is a little bit muted this year because we have an unusual situation where the equity markets are falling sharply in a risk-off environment, but we also have rising interest rates as the Fed tries to combat inflation. So these higher rates, of course, put downward pressure on bond mutual fund prices. And that's exactly what happened. However, even despite this unusual factor, the bond funds did fall a little bit less than equities did during the first half of this year. Now, I decided to shift back to 100% stocks on July the 18th. I have no idea whether this was the bottom of the current downturn or not, but like I said, my bond funds did happen to lose less than I would have lost had I kept those funds invested in VTSAX. In fact, the difference was just about $8,000, or about 6.4% of my initial investment of $125,000. So I'm back to 100% equities, and my allocation at the moment is 60% US and 40% international. This does reflect the current sort of market balance, because ex-US stocks have taken a steeper dive than have US stocks, likely largely due to the closer impact of the Russian invasion of Ukraine, Western sanctions, and fears of recession in the Eurozone. In fact, I just saw a video today where some big hedge fund guy, who's always, kind of a talking head as well, this guy Ray Dalio, his hedge fund has positioned itself to have some large short positions in some of the stocks 600, so some of the major companies in the Eurozone, or in Europe. I'm basically going to be doing the opposite of what he's doing, and around next month, when my 401k will allow me to rebalance, since I just rebalanced a little bit, it's not letting me, there's a minimum holding period. So next month I'll be rebalancing back, as I mentioned before, to a 50-50 US international split in my portfolio. So again, I think basically I just got lucky with the timing here. And again, I have no idea if we got the bottom of this thing or not. I have no idea what's going to happen in the future. Definitely don't believe that you can do market timing. Really, the main point of this video was to update you on how my portfolio is doing and what my plans are for the future. And by the way, there are some potentially interesting changes that are going to be happening with Vanguard, and fingers crossed also with Charles Schwab in the future. So as those things come about, if they do, then rest assured I'll be talking about that in future videos. But I hope you liked today's video. If you did, please hit the like button and consider subscribing. Thank you very much for watching, and I'll see you in the next video.